Recessions are coming. Inflation isn't just back, it's sticking around. Markets are unstable, currencies are under pressure, and governments are running out of room to fix things. Most people? They're confused, worried, maybe even frozen. But the billionaires? They're not waiting to see what happens. They're already moving, pulling cash out of risky sectors, loading up on specific assets, and building portfolios that can survive the chaos ahead. And while the average person parks savings in a bank that barely beats inflation, the ultra-wealthy are putting their money to work in smarter, safer, and more strategic ways. In this video, I'll walk you through exactly how billionaires are protecting, and even growing, their wealth in 2025. More importantly, I'll show you how you can start applying the same principles right now, even if you're not a millionaire yet. Because this next chapter isn't about who has the most, it's about who plays it smart.
Why the rich think differently.
Here's the truth most people miss. The wealthy don't think like the rest of us. They don't focus on paychecks or promotions. They don't measure wealth by how much they earn, but by what they own, what they control, and how well they can protect it. Their mindset starts from a different assumption: that systems break, that currencies can collapse, that governments will print money to solve problems, and in doing so, quietly destroy the value of your savings. The average person thinks the system will always work. Billionaires assume it won't. That's why they don't keep all their wealth in cash. That's why they don't rely on just one income stream or one country's economy. They focus on durable assets, things that hold value even when markets crash. Real estate, commodities, private businesses, strategic equities. And they design their financial lives around risk insulation. Not just growing money, but shielding it from inflation, currency devaluation, taxation, and political chaos. Because when you think in decades, not days, wealth isn't about chasing returns. It's about building structures that survive storms. This mindset shift, from income to insulation, from salary to strategy, is exactly what separates people who stay afloat from those who get wiped out in the next recession.
What they're avoiding in 2025.
Let's flip the lens. It's not just about what billionaires are buying, it's what they're actively avoiding right now that speaks volumes. In 2025, the smart money is quietly pulling out of overhyped tech stocks, especially those with bloated valuations and no real profit engine. They've seen this movie before: bubbles fueled by hope, not fundamentals, and they know how it ends. They're also avoiding real estate bubbles, especially in cities where home prices have skyrocketed beyond what average incomes can support. While others chase the dream of property riches, billionaires are getting out before the crash. They don't want to be holding overpriced assets when the correction comes. And banks? Particularly those heavily exposed to commercial real estate and risky debt portfolios, they're being watched closely. Billionaires are quietly reducing exposure to financial institutions that may be sitting on ticking time bombs. But here's the real kicker: they're not hiding in traditional safe places either. Fiat savings? Losing value every day to inflation. Long-term bonds? Still paying too little while carrying too much interest rate risk. What the average investor sees as safe, billionaires now view as illusionary comfort. Because if your money isn't keeping pace with inflation, or worse, trapped in a fragile system, you're not protected. You're exposed. So, while the headlines focus on what the wealthy might buy, the real insight lies in what they're walking away from.
Where they're putting their wealth.
So where is the smart money actually going in 2025? While the average investor chases trends or panics into safety, billionaires are positioning with precision. They're not guessing. They're allocating across 4 powerful categories, each one built to endure economic storms and come out stronger. First, cash and liquidity. Yes, cash. But not the way most people hold it. This is strategic cash. Warren Buffett is sitting on over $150 billion, not because he's afraid, but because he's waiting. He's holding T-bills and short-term government bonds as dry powder, ready to strike when opportunity appears. This isn't panic. It's calculated patience. In chaotic markets, liquidity is power. Second, hard assets. Gold, silver, land. These are assets that don't rely on promises or paper. When currencies weaken and inflation erodes savings, hard assets hold the line. They're not flashy, but they're real. That's why the ultra-wealthy are buying up farmland, bullion, and scarce resources while others ignore them. Third, private equity and control. Billionaires don't just invest, they own. Not through stocks everyone can buy, but through private companies. Businesses with strong cash flow, pricing power, and often, monopolistic edges. These aren't driven by daily headlines or retail panic. They focus on control, because control means freedom. And private equity gives them income, leverage, and long-term resilience. Fourth, geographic diversification. They're not just moving money, they're moving options. Second passports, offshore accounts, real estate in neutral, stable jurisdictions. Not to escape, but to create flexibility. If one country faces chaos, they have a base elsewhere. This isn't fear, it's freedom insurance. In short, while most people put all their hopes in a job or a 401k, billionaires are quietly building resilient wealth ecosystems, globally, tangibly, and intentionally. Because they know the goal isn't to time the market, it's to outlast it.
What they're doing that you can too.
Here's the truth, you don't need millions to think like a millionaire. You don't need a hedge fund, a private banker, or a second passport. What you need is the right mindset. Because what billionaires are doing in 2025 isn't magic, it's a framework. And you can apply the same logic right now, no matter where you're starting from. Start small. Start smart. Hold a portion of your money in high-interest T-bills or money market funds. Not all cash is dead weight. The goal isn't to hoard, it's to stay liquid, so when opportunities show up, you're not begging for capital. You're ready. Then, diversify. Inflation-proof assets aren't just for the rich. You can access gold ETFs, farmland REITs, even tokenized real estate, all designed to hold value when the dollar doesn't. This isn't about chasing hype. It's about protecting what you've worked for. Learn to spot asymmetrical bets, small risks, big upside. That's how the wealthy play. They don't swing at every pitch. But when they see one with limited downside and massive potential, they act. And that kind of thinking? It doesn't cost $1, it just takes discipline. The biggest shift you can make isn't in your bank account, it's in your brain. Stop thinking like a paycheck collector. Start thinking like a portfolio manager. Every dollar has a job. Every risk has to be worth the reward. Because at the end of the day, the real advantage the wealthy have isn't just capital. It's clarity. It's calm. And it's a framework built not for tomorrow, but for decades. So, what are you building?
Closing insight and your next steps.
Most people think billionaires are just lucky, or that they had some kind of unfair advantage. But the truth is, they're not necessarily smarter. They're just better prepared. While the world panics over inflation, market crashes, and political noise, the ultra-wealthy are doing what they always do, expecting volatility and building around it. They don't wait for certainty. They position themselves before the storm hits. And the key difference isn't how much money they have. It's how they use it. They focus on protection before profit. They build frameworks, not just portfolios. They don't chase every trend. They choose a few strong plays, allocate strategically, and stay patient. That mindset alone is what separates long-term success from short-term panic. So let me ask you, what are you doing to prepare? Are you structuring your finances like a paycheck collector, or like a portfolio manager? If you had to protect $1 million right now, would you know where to put it? It's not about having that kind of money. It's about thinking as if you do. Because the habits you build today will decide the options you have tomorrow. This isn't about copying billionaires. It's about understanding how they think, how they act, and why it works. Take what applies, ignore the rest, but don't stay in the dark. If this video helped shift your perspective, even slightly, then do one thing right now: like the video, subscribe to the channel, and check out the next episode where I break down the specific assets smart money is quietly buying before the next crash. Because in 2025, the people who prepare early won't just survive, they'll own the future.